Hey everyone, Coach Investor back to another video for today. So a bit of a different type of video, but I think it's important for you to know what's going on right now, especially when it comes to the banks, or more specifically, two specific banks, Silvergate Capital and Silicon Valley Bank, and why those two banks made the other major US banks, Morgan Stanley, Goldman Sachs, Citi, Bank of America, etc., all of those stocks were down heavily on Thursday. So what exactly happened? What's going to happen in the future? Remember, last year, don't remember when exactly, but we had that story with Credit Suisse. Is Credit Suisse the next Lehman Brothers? A lot of noise during 1 week, and then what happened? We don't know. Well, we don't know. We know nothing happened after that. A lot of noise, a lot of people talking. Of course, this is causing some panic, and maybe a bit can be said about Silicon Valley Bank right now. This is exactly what the CEO said. Remain calm, don't panic, because if suddenly there is more and more panic, then it's just a self-fulfilling prophecy. Even though there is maybe nothing right now, we don't know, there might be something, but let's say there is nothing right now, just because some other investors, some people think that there might be something happening, you're just pushing the snowball and then it becomes bigger and bigger and bigger as it rolls down the mountain. So that's a basic overview of what actually is happening right now. Lots of panic, lots of stress. But we're going to have a look at exactly what has happened, why the Fed might be a little bit the cause of what is happening. Because remember, going from 0% interest rate to close to 5% in record time, well, for those that are holding treasury bills, especially banks, this is basically a knife in their back, so to speak. So if you're interested in that, hit that thumbs up button, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. So first up, we have here Silvergate. Now, they say here the holding company for Silvergate Bank today announced its intent to wind down operations and voluntarily liquidate the bank in an orderly manner and in accordance with applicable regulatory processes. In light of recent industry and regulatory developments, Silvergate believes that an orderly wind down of bank operations and voluntary liquidation of the bank is the best path forward. The bank's wind down and liquidation plan includes full repayment of all deposits. The company is also considering how best to resolve claims and preserve the residual value of its assets, including its proprietary technology and tax assets. In addition, Silvergate Bank made the decision to discontinue the Silvergate Exchange Network, which it announced on March 3, 2023 on its public website. All other deposit-related services remain operational as the company works through the wind-down process. Customers will be notified should there be any further changes. And if you're in the crypto world, well, Silvergate is or was heavily linked with a lot of crypto projects. Now, this is part number one. Part number two is maybe a bigger deal here. So this comes directly from Silicon Valley Bank's website. So the financial group announces proposed offering of common stock and mandatory convertible preferred stock. So in the investor letter, which we can see right here, they say they have sold substantially. Let me maybe zoom in a bit. We have sold substantially of all of our available for sale securities portfolio with the intention of reinvesting the proceeds and commence an underwritten public offering, seeking to raise approximately $1.75 billion between common equity and mandatory convertible preferred shares. As a part of this capital raise, General Atlantic, a leading global growth equity fund and long-standing client of Silicon Valley Bank, has committed to invest $500 million on the same economic terms as our common offering for a total raise of $2.25 billion. They say here that they are taking this action because we expect continued higher interest rate pressured public and private markets and elevated cash burn levels from our clients as they invest in their businesses. Now, to which I'm going to go back to what I said before. When you go from 0% interest rate to 5% in record time, banks that do hold treasury bills will take a huge hit. Why is that? Because the paper that they're holding is just worth much less right now. So them, for example, Silicon Valley Bank, are ready to take a hit. How big of a hit? Well, we can see it right here. A post-earnings loss of approximately $1.8 billion in connection with the sale. They expect the reinvestment of the proceeds to be immediately accretive to net interest income and net interest margin, resulting in a short payback period of approximately 3 years. Now, they took a loss, they sold what they held right now, and if they buy Treasury today, which pays around a yield of 8.2, 8.3% or so, makes a bit more sense. But again, the Fed right now, because they went from 0 to 5% or close to 5% in record times, it's going to hurt banks. Maybe not the biggest banks out there. Don't expect another '08 scenario, in my opinion, because banks right now are heavily regulated or more regulated than what they were in 2008. They're way more healthier today than they were back then. But smaller banks, banks that invest in startups, those are the banks that are probably at risk, and those are the banks that you see will be the casualty of going from 0 to 5% in record time. And again, this is why you see here taking a $1.8 billion loss. But of course, they have to reassure investors out there, so they say even before today, we had ample liquidity and flexibility to manage our liquidity position with one of our lowest loan-to-deposit ratios of any bank our size, income from progressive securities paydowns, levers to manage our off-balance sheet client funds, and substantial borrowing capacity. They then say the improved cash liquidity, profitability, and financial flexibility resulting from the actions we announced today will bolster our financial position and our ability to support clients through sustained market pressures. They continue with the reassurance here. The actions we are taking reinforce our commitment to remain a strong financial partner to the innovation economy and supporting long-term clients' interest regardless of economic cycles. Again, they don't want to create panic, because if there is more panic, well, you guess what? They'll be taking more losses eventually. Oh, and by the way, with regards to the $1.8 billion loss, well, that comes after a sale of approximately $21 billion of securities. We talked about the securities before, but this is the amount, $21 billion worth of it. And so, to conclude, although the stock on Thursday was down 60%, right now at the time of making this video, pre-market, the stock is down another 65%. Now, whether or not this is justified remains to be seen in the coming weeks or maybe months. But yes, the Fed had something to do with this, of course. Not their fault. They're just trying to manage the overall market, the overall economy. But remember, the Fed is also here to help with stress. So now they have to juggle around with high inflation, low employment rates, and maybe banks being in financial trouble. What will happen? Well, we'll just have to wait and see in the next Fed meeting. But to me, there are two scenarios here. Either they are really, really in trouble, and this is not another Credit Suisse story, but the panic is real, or the panic is not real, but it's a self-fulfilling prophecy. Since the panic is fake, a lot of people will panic, snowball becomes bigger and bigger, rolls faster down the mountain, and then they just become a casualty of, well, scary headlines and just panic. And so that's why all the other major banks were also down on Thursday. That's basically the big story right now. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.